Hi, everyone. This is Jason Barrick of Wall Street for Main Street. Welcome back for another Wall Street for Main Street podcast interview. We're recording this interview on Monday, November 17th, 2025. The US dollar gold price has been in a correction mode with the uncertainty with Federal Reserve Bank policy after the most recent rate cuts. If there's going to be more rate cuts, problems in the banking system, especially with private credit right now, and the weakening of the US consumer. There's a lot of signs with the shares of stocks like Kava Group and Chipotle and many of the restaurants that are down enormously, that there's signs of a recession. The US dollar gold price is still hanging a little bit above 4,000 at $4,047. The silver price is still right around $50, so it's doing very well. Today's special guest is a returning guest. He's on his 10th edition of his gold and silver textbook, How to Invest in Gold and Silver, a complete guide with a focus on mining stocks. He also runs the largest database of gold and silver miners. He covers all of them extensively, including the juniors at goldstockdata.com. Don Durrett, thank you for joining me again.
Hey, Jason. Great to be back.
So, Don, we have the Q3 numbers out for the gold and silver miners. I want to talk about earnings, free cash flow. We're starting to see a lot of the miners, Coeur Mining and others. Historically, they would have problems, hitting their numbers, guidance with the Wall Street investment banks, the Canadian investment banks covering the companies. They're now beating the numbers. Do you think that we're going to see a sustained pattern here where the gold and silver miners that are producing, that they can keep their costs relatively under control and maintain free cash flow and maybe even grow it going forward?
Right now the margins are very, very high, and I think they're going to stay high for a while. So the last quarter, it was about, basic was about 1550. So you have to pad that. I'd be conservative about $700. So it's about 2250 is kind of break even. So at 4200, 4250, you have $2,000 margins. So it's about 1800, let's call it $1,800 margins on average right now. That's very, very high, all time high actually. And even I think oil will stay under control over at least the next 6 months. So then this quarter is going to be unbelievably strong. So the last quarter, the average price was 3,400. So you had about $1,400, maybe somewhere in there. And now we're up to 4,000. So this is, and we're kind of a month into this, more than that, October, November, December. So this quarter for Q4 is going to be really, really strong for the producers. But I think that the margins are going to stay strong all through 26. And I think that the margins are actually going to go higher. So we're right now around 1,800. I think we're going to go maybe as high as 3,000 before this thing actually finishes. So I think,
3,000 for like a free cash flow margin.
yeah,
So net
yeah,
profit margin, not gross.
right. 3,000 free cash flow margins. I think they're going to go as high as three is my expectation. And if that happens, if we just stay, 1,800, if we just stayed here, for instance, the miners are making a lot of money, but they're not aggressively paying down their debt. Some companies are paying debt quarterly, and some companies are like not even paying down. Like Pan American, they didn't even pay down any debt to the last quarter, and a lot of them are. Newmont definitely paid down a significant amount. So some of them are paying, some of them are not. I want to see the free cash flow multiple right now for Newmont is under a nine. And if they can clean up their balance sheet, which will take about 12 months, maybe 9 months, they can, blast out their cash and get their debt down, and maybe reduce it completely. I think their multiples start blowing out. So until the multiples get in the mid-teens, we're early. So
And
sub
that debt
10,
was from the Newcrest acquisition a couple years ago.
yeah, I think it lowered their cost a little bit, but their valuation really dropped when they acquired Newcrest. They took it in the chin, but they're not the only one that's under 10. Barrick's under 10 as well. I think Agnico Eagle is like 13. They're like the highest one, and they're cheap. And it's like what happened is that went up and they started having these really high margins, but the valuations of the companies didn't keep up with the margins because gold went up so quickly. It went up from 2,000 to 4,000 fairly quickly. And Wall Street didn't believe it. Wall Street's still valuing these companies as if gold's going to crash. Wall Street's happy with they're making their money on, on Wall Street. They don't want to invest in mining stocks. Um, Newmont's the only stock in the S&P 500. That's where they focus most of their money. And so nobody's buying the miners. And so until these multiples start going higher, if you will, and I think they will, these stocks are still undervalued severely.
Relative
So
to the gold price, you mean? So if
yeah,
you're doing like net present value, future discounted cash flows of say a senior or mid-tier gold miner at the current gold price, or even discounting 10 or 20%, you're saying that the valuation is way above the current valuation then.
yeah, absolutely, way above. And so what's going to happen is the longer that gold stays above 4,000. So if gold just stayed where it's at right now, it just stayed at 4,000 for like 12 more months. Newmont's share price would go up probably 50% because they would get valued based on their free cash flow. And so I believe that these stocks are all trading about half off right now, just at the current price level. So at fair market value. So Newmont's about trading around 90. I see that stock going to 300 at $5,000 gold. Now, how in the world does it go from 90 to 300 with gold only going up $1,000? The way that it does that is it goes up like doubles from 90 to 180 or 90 to 160 just on getting revalued correctly, where its free cash flow multiple reflects its free cash flow, and then the price goes up from 4,000 to 5,000. They increase their free cash flow, and so as they do that, the valuation doubles again, and so again, and Newmont's just one
Or they add
example.
growth. I mean, they add near-term growth. So
None. They don't need any growth. That's the thing about this. That's the beautiful thing about free cash flow. When free cash flow expands, it increases the multiple and it improves the balance sheet, which de-risks the company. So if you have, let's say that Newmont has $2 billion in cash, and they currently have like $4 billion in cash in their balance sheet and $4 billion in debt. But if they have 2 billion in cash and then no debt, and then in a quarter they bring in $1 billion, that $1 billion, all of it goes back to the shareholders. And then when they do that, they're buying back stocks and they're paying a high dividend. Then their multiple expands. I saw this with Kirkland Lake, and it was a thing of beauty. And Kirkland Lake was making everybody look bad because Kirkland Lake, they had zero debt. They had $750 million in cash on their balance sheet, and they were generating a lot of cash. So all the cash that came in turned around and went back out to the shareholder, and their multiple just exploded.
So for our listeners out there, that was the Fosterville mine in Australia. That was a small
Yeah.
producing gold mine, and they found an enormous amount of gold at much higher grades underneath the existing deposit, and that really allowed them to keep the costs down because they didn't have to spend, $1 billion or $500 million to go and build a new mine. They were able to just drill more underground, and there was a lot of infrastructure there already, and that kept their costs down and it allowed them to have better profit margins, free cash flow. But the problem is what Fosterville only was a great mine for what 7 to 10 years. It didn't last. I think it's
It's
petered out
still
now.
it's still going. They're not getting 30 grams per ton, but it's still a very profitable mine. But let me finish up the idea on Kirkland Lake. So they had high margins. So they had because their cash was like $300 an ounce, and so their all in was like 800, somewhere around there, maybe less than that, 600, 700 all in. So gold was at 1,200, 1,300. They didn't have $2,000 margins, but their margins were high, and so they were generating because they were mining like 750,000 ounces a year. But their balance sheet was pristine. And so they had a pristine balance sheet with high margins and their multiple exploded. Well, that's exactly the situation we have today. We have high margins, so all these companies have to do is clean up their balance sheet and their multiples will expand. Now, Lundin is a good example. Lundin has no debt and they have good cash and they're generating a lot of free cash flow, but their multiple hasn't exploded yet. And I think the reason why is because when Kirkland Lake, when their multiple was exploding, we had positive sentiment. Now we don't have the sentiment is terrible, and so nobody's really interested. And then Lundin's also in Ecuador, and people aren't excited about Ecuador. But I think if Lundin was in Canada or Nevada, they probably would have a 20 multiple. But I'm expecting the multiples to really, really explode as the sentiment improves and the margins remain high and the balance sheets get cleaned up. Those are like the three factors, and I think they're all going to happen. So all we're waiting for we're waiting for these balance sheets to clean up, and they'll clean up fairly quickly within 12 months, I believe. But the last shoe we're waiting for is Wall Street to want to own these things. Wall Street's like, we don't care about those speculation, those gold miners. We don't need to do that. We're going to stick with what we like, what we know. They're not going to buy these miners until the S&P stops going up. And we're starting to see that in the last 2 weeks. We've seen today we had a 1% down day in the S&P. We hadn't had a 1% down day since April, and now we've had five in the last 2 weeks. And I think we're each reaching the end of the S&P. This has been a 15-year plus rally. And that's really the last shoe to drop, in my opinion. Once the S&P stops going higher, Wall Street is going to have to look around and say, where can I make money? And they're going to go, wow, GDX is up 130% for the year. Newmont's up 130% for the year. I think maybe I should buy some of that.
Now, I want to talk about mergers and acquisitions in the space. There was just another large deal where New Gold, I guess, was acquired or merged with Coeur Mining. I was kind of surprised because New Gold had problems over the years with Rainy River. They had finally gotten it on track at a low cost. So they had a very low cost gold and silver mine in Canada. Are we going to see a lot more mergers and acquisitions like that? Or do you think some of these larger, the senior and mid-tier gold miners, are they waiting maybe for more of a correction? Because the GDX, yes, it's still near an all-time high, but it's not that much higher than the 2011 high. I think the 2011 high was like $64 or $65 a share. It got up to like $78 a share on the GDX, and now it's down to around 74. So we're not at those high valuations, pricing in the higher cash flows. Like you said, we're only slightly above the 2011 all-time high. Do you think the larger gold and silver miners, say a Barrick Gold that hasn't done an acquisition since the Rand Gold merger, 7 or 8 years ago, something like that, when Mark Bristow came on board and they wanted the GOLD stock ticker symbol, that was also supposedly one of the main reasons that they did the deal. Do you think they're waiting for a sizable correction so then they can come in after a correction in the gold price and the mining stocks and say, oh, we're offering a 20% premium after a correction?
So I think we don't know. All we're doing is speculating here, but I think maybe one of the reasons why Briscoe got pushed out is because Barrick has somewhat underperformed, and he was going into copper, and he did the Rand Gold deal in Africa, and he's also going in Pakistan, and he's like, and the board was a little upset with that he wasn't focusing on gold or focusing on lower risk assets. So the rumor today is that Barrick is going to break up and do a spin out of their African and Asian companies, the higher risk assets, into a separate company. And then Barrick Gold is going to go back into gold mining. That's the rumor. If that's what they end up doing, then I would think Barrick would definitely be looking for acquisitions. Absolutely. Big acquisitions is my expectation. So I think Barrick
and probably in a safer jurisdiction, you would think, probably since they had the
yeah,
issues with the mine confiscation in Mali, you'd think they would target something maybe in the US or Canada
yeah,
or Australia then.
absolutely. Yeah, and go back to gold mining, get away from the copper focus that Briscoe was doing. And I think that a lot of people on the board are starting to realize that we're in a bull market in gold here, but we're not in a bull market in copper. And we know that we don't know, but that seems like it's becoming more obvious that gold's going higher, a lot higher, if you will, because of what's happening in the U.S. But we don't know. Yeah, there's demand for copper, but there isn't a real signal here that the United States and Europe are going to be able to kind of fix their economies, and that Asia And without the US and Europe growing their economies, it's going to be hard for Asian economies to grow at a rapid pace. So if that's the case, then copper is going to have a bit of a headwind. So gold has a better angle, if you will, for in the next 2, 3, 4 years. I think Barrick is kind of figuring this out. That's the reason why I think they might divest those assets. The one I think the Pakistan was copper, and they're like, so now they're like, well, let's just spin those out. You mentioned the deal that Coeur did with New Gold. I thought it was brilliant. Their acquisition of MAG was very, very smart. It fixed the company. And now they did this back-to-back deal, and now they acquire. Actually, it was Pan American that did MAG. They did Silvercrest. Silvercrest was a brilliant acquisition by Coeur, and it basically fixed their cost problem with silver, and it increased their silver exposure. Now they did this gold deal, so they didn't overpay for Silvercrest. They got it for a great price, and now they got a really good price.
Well, I'm
For
surprised the
New
new
Gold.
gold would sell though. I mean, like, wouldn't think it looks like things were going well. What I'm just surprised the new
Exactly.
gold would want to sell now because like they had so many problems over the years at Rainy River. They almost went
Exactly.
bankrupt bringing that mine
Well,
online, and then they finally got the cost down. I think you said the costs were under $1,200 an ounce there.
they actually the last quarter, New Gold was down to $1,000 ASIC, and their costs are supposed to remain low for the next 2 years. So yeah, it was amazing. Why would they sell? Absolutely. Coeur got the better deal, but New Gold was trading at a 5 multiple, which is so they basically paid half off, at least half off. It could be in the teens at these margins. Now, the reason why Coeur did this, and they got a small premium, I think it was about 15%, maybe a little more than 15% premium. And the reason why they didn't charge them the high premiums, they didn't want to damage Coeur stock, and Coeur still crashed. They went down from 20 down to under 14. So even though they gave a small premium, they still crashed. But the reason why New Gold did this is because they created a very, very strong company. So the New Gold, they ended up with 38% of the combined company. So they
So you're
made,
saying the combined company is way stronger, but I mean, as a
yeah,
new gold shareholder, I'm kind of left scratching my head here about like all the problems the company went through. Why would they sell out now when all the problems
you're
like
getting
operationally appear to have been fixed?
the reason why is because you get a stronger company that has more growth potential. So New Gold, they're kind of stuck. They only have two assets, and both those assets are not much more than 8 or 10 years. So they don't have any really, really super long life mines. That's a risk. But it's not a risk for Coeur because Coeur will probably be able to extend the life on one of them, and the other one they'll be able to replace over time. And so it reduced the risk for New Gold and it created more upside for them. So they were both about the same as far as upside. New Gold was a little higher, but not much higher. So they weren't giving up a lot of upside, but they were reducing their risk. So the board at New Gold, I thought they did a really good job. They charged too much of a premium though, because it ended up hurting Coeur too much. They should have just charged a 10% premium. I think would have been better. But my point is that it was a very accretive deal. We are not seeing any companies do aggressive deals where they overpay. Like historically, Kinross likes to overpay from time to time. They'll pay, for a development story, they'll pay
Are you
300.
talking about Great Bear? But I think if they had
Yes.
waited, they had zero chance of winning that deal. So like Barrick Gold or Newmont, they were looking supposedly at Great Bear, and had they waited, there would have for let's say a feasibility study, Kinross had zero chance of winning that bid.
Right, but historically, if you look at some of these other development projects, there's a lot of them in Canada. None of them anywhere close to the valuation that Great Bear got. I mean, you're talking about Stellar and Thesis. Um, they're all very large. Stellar has 18 million. Thesis, I don't know, 12 million ounces. These are very big mines. Nobody's getting valued anywhere close to $300 an ounce in the ground. So Kinross did pay. I mean, it was a good project. My point is nobody's paying that amount today. No one's paying No one's paying $200 an ounce in the ground for development stories. Probe Metals just sold for Fresnillo for $55 in the ground. 55. A high quality development story in Canada, and Fresnillo paid 55. So the reason why they got away with it is that the value of these companies is just really, really cheap right now because we went through this 10-year bear market and we haven't had these revaluations yet. The bull market in miners started in August. That's when silver got above $40. Until silver got above $40, nobody was interested in these things. The HUI finally, as soon in August, if you look at the HUI in August, we basically got a breakout in the HUI. The HUI is a gold miners index, large cap, and that showed you that investors finally were interested in the mining stories. But the first thing to go in a bull market is going to be your majors and high quality companies. But the lower quality developers haven't really participated yet. But we've seen some movement. We've absolutely seen some movement, but it's still early. I mean, we're like 3 months in. But we're going to see a lot of we're going to see a lot of M&A, but we haven't seen an aggressiveness yet. Nobody's aggressive.
Well, I
Nobody's
think they're waiting. I think they're waiting for that dip, and I think then they're going to say like after a dip, like, "Oh, we offered a premium to the market price," similar to what happened with Sandstorm Gold, how Royal
right.
Gold took them out at the perfect
Well,
time
right.
before the assets were coming, before more of their growth assets were coming online. I think we're going to see more of that scenario where it even happened with New Gold, right? Because Coeur
Right.
d'Alene waited until a dip, and then they came in and offered what after there was a dip, some type of premium to the market price.
Yeah. So the deal that Fresnillo got for Probe, $50, that is so cheap. The next deal is probably going to be at 100 for a quality developer, and then it'll go 150, and then it'll go 200. So we have these. We're going to have these step ups. But
That's a Canadian gold junior, right? That's Fresnillo, the
yeah,
largest producing silver miner in Mexico. They went and bought to diversify what a Canadian gold
yeah,
junior.
yeah. Everybody's wondering why they did it. It was pretty interesting. They did it just because um, they see
The
gold going
margins are
higher.
better. The margins
They,
are better historically for gold mining anyway.
yeah, they just saw it as an opportunity to make money. They looked at all the projects and they liked that one. They made an offer and Probe went for it. Um, so yeah, but
Well,
my point
I
is,
think personally, Don, like I'm kind of in the minority here, but I think they should buy Los Filos because it's not a well-run gold mine in Mexico, and they could probably buy it from Equinox Gold at a discount because we know Equinox Gold wants to sell it, and Fresnillo already has good, contacts and operations in Mexico, so they
yeah,
could
I
probably
agree.
turn that mine around. That would be a good addition for them. They have a mediocre amount of gold production in
Right,
Mexico. That would be a good opportunity for them to buy a discounted asset, spend some
right.
additional capital because they
Well,
could renegotiate all like the royalty taxes. And Equinox Gold said they can't do it, and I bet Fresnillo could with their political contacts in Mexico.
right. It's it's amazing there's so many good projects out there that haven't been taken out. It's kind of mind-boggling to me. I mean, if you look at Bear Creek, their Karani project, it's construction ready. We're at $50 silver and nobody's made an offer.
Well,
It's
the people I talk to, Don, say that the silver's a byproduct and it's mostly a base metal mine. So they have like way over 100 million ounces of silver, but it's mostly a base metal mine. And they also like the rules in Peru for mining are extremely dicey because they saw a lot of the politicians and bureaucrats in Peru and the environmental protesters. It's really, really tough bringing online a new mine in Peru because what you have the Antamina mine, which has been producing for what
it's
10 or 15.
already it's already construction ready, Jason.
Yeah, but I mean, like, there'll be protesters. I mean, it's worse in Mexico, I think, because Peru's been in a permanent downtrend now for annual silver production. They used to be the top, for our listeners out there, the top silver producer annually in the world, and they've been in a permanent downtrend. I think the last 7 or 8 years, and it's not because they don't have good geology or good deposits. It's solely for political purposes with their politicians and bureaucrats and environmental lawyers, NGOs, and protesters.
Right, but usually that occurs during the permitting process. I mean, it's possible there's some political issues, but I haven't heard that. I think it really comes down to is that just nobody, and you're right about it is polymetallic, but at $50 silver, it's highly economic. The thing is that nobody's really thinking down the road, if you will. So if gold price, I think the minimum gold price over the next 3 years is $6,000 minimum. And it's probably going to be higher than that. So if you take $6,000 gold, we're currently about 1.1, 1.2% of gold. So if you look at gold at 4,000 at 1%, it's $40, and we're at 50. If you go 20% at $4,000 gold, it's $80 silver. And 20.2% of gold is actually very low. So if you go to $6,000 gold, which I think we're going, that's $120 silver. So Corani at $120 silver, even with no offsets, only with silver, it makes money. So nobody's thinking, okay, there's a project, but
I agree it's a good I agree it's a good project, but like from speaking to mining company people, I mean a lot of them are very hesitant to build a mine in Peru at this point.
well, okay. Well, my point is that nobody's being aggressive on M&A. There hasn't been not a single silver development story get taken out. I'm waiting for the first one. Now, Abra Silver is another one that I think is ripe to be acquired. That's another one. It's not construction ready yet, but it's close.
Did you see the speech from Bolivia's they had like an election, I think, and there was a new speech from Bolivian government and they said they want to open up similar to Argentina.
Oh yeah, Bolivia. I think Bolivia is one of the better places to mine right now in South America. I'm very bullish on Bolivia. That country is slowly went to the middle. It's pretty amazing. I think Bolivia is a
I think they have the most silver
New
deposits, like
Pacific.
some of the.
And there's another. Okay, so there's another one in Bolivia, New Pacific. New Pacific has two big silver projects down there. Now the problem is really difficult to acquire because Silvercorp owns 28% and Pan American Silver owns, I think, 10. So that's 38%. Good luck acquiring that one, but somebody could at least try.
Yeah, we'll
Uh,
see. I mean, it's like it sounds encouraging, the words from the speech. It sounds like Bolivia wants to open up and be more pro mining. So we'll see for foreign direct investment, foreign capital, because then what
right.
that'll be more jobs, more infrastructure if they don't, treat the foreign investment, foreign direct investment badly. I want to ask you though about like some of these Canadian gold producers that could potentially be takeover candidates for a senior mid-tier gold miner, say like a Barrick Gold, which hasn't really done acquisition in a very long time. I would suspect that Barrick would be looking at buying a mine, say in Canada, the US, or Australia. It's safer after what just happened in Mali. Do you think a company like Artemis Gold, which has Blackwater, what they're producing around 300,000 ounces a year gold, they're a very ultra low cost producer. They've talked, they already have the plans to expand that mine up to 500,000. Do you think that that company would be a potential takeover candidate for a larger miner like a Barrick Gold?
Oh, absolutely. Artemis, I mean, if you look at their free cash flow, they did a fantastic job building that mine. Their management team, I think they came from Atlantic. So they were had a mid-tier company, and then they sold, I think, to Santa Barbara, and then they came over and bought Artemis and built Artemis from New Gold. They did a great job. So yeah, I mean, it's a fantastic mine. I thought that they would acquire somebody by now, and they need to acquire a company that can protect them. They need to get some strategic investors in there and then build it up. But yeah, Artemis and Skeena, because Skeena is very close to production. The other one is Osisko Development. Those three are all um, are I think highly fantastic takeover. If you're a major, if you're looking for big mines that are advanced. And then you have Stellar and Thesis and Amex. Those three all look fantastic. And then you got Next Gold. There's a lot of really good projects in Canada. I don't know
How
what's going
far
to
away are
happen.
some of those? Are those projects at like pre-feasibility, feasibility? How far away are those? Some of those projects?
Skeena is very close to development, and then Amex is under development. I mean, excuse me, Next Gold's under development. Stellar Thesis and Amex, those are all out there a ways, and so they wouldn't be as interested in them. As West Red Lake just got into production, but I don't think a major wouldn't be interested in West Red Lake. More of a mid tier. But Next Gold, and I don't think Next Gold's for sale, but they're going to start construction next year. Skeen is close to construction. Those are the two really ripe ones. And then you got Stellar Thesis, Amex. Those are out there ways. Troilus is one that is perfect for a major. I'm surprised Troilus hasn't been acquired yet. they're ramping up. And then you have the one in Idaho, Perpetua. They're really close to production as well. So there's a lot of big projects that are in the works in Idaho and Alaska and Canada.
Are one of those juniors that you just mentioned, are they next to a producing mine for Alamos Gold? Because I think on the last interview or two, you mentioned one of the juniors that had a deposit right next to a producing gold mine from Alamos.
I think it might have been next goal, but I'm not sure.
Yeah, the most aggressive one has been Equinox Gold. So they did, I think, the largest amount of acquisitions over the last 5 or 6 years. It was tough digesting them. They finally, I think, Greenstone just hit nameplate production capacity. Do you expect the cost then for a mid-tier producer like Greenstone to come down now that they have two producing mines in Canada? I think the other one, Valentine, I think that just went cash flow positive, or at least like it's cash flowing a little bit right now.
Yeah, that's the hope, that their cost will come down. Their costs are high right now. And that's one of the reasons they're thinking of selling one of their highest cost mine in Brazil. I'm not excited about that because then they're going to have to replace that production. So we'll see what happens. But I'm bullish Equinox. I think they are a shark. I want to own aggressive companies that are sharks that are going to grow that way. Um, SSR Mining is another one. They acquired the Cripple Creek mine from Newmont. Equinox likes to do acquisitions. IM Gold just did Northern Superior. They're aggressive. Uh, G Mining, they've acquired their third mine, and they're building their second one. And they're aggressive. I like that. So these companies that are aggressive, I really want to own them. And Equinox fits in that one. Um, and Coeur just did theirs. They're showing they're aggressive. I'm hoping Hecla does an acquisition soon. I'm hoping First Majestic does an acquisition soon.
Didn't they just buy
So
Gatos? First Majestic bought
yeah,
Gatos not
yeah,
long,
yeah.
12 months, 12 months ago, somewhere in that time
I,
frame.
yeah, I'm ready for them to do another one. I like it when these companies grow their production.
Are we seeing some of these one or two asset juniors that either have one producing mine or they have a feasibility study? Are we seeing them able to get all the financing they need, say for a royalty and stream, equity and debt to go and build the mine and get it into production? Is that a lot easier for
Yeah.
them right now?
Oh yeah, it is easier. Go Gold, they'll have no problem financing theirs. Is about 250 million. Next Gold, they finance theirs no problem. It was about 250 million. Now, if you go north of 500 million, then it starts getting dicey. But Montage in Africa, they had no problem with theirs, and it was about 700 million. So it depends on the project. But right now, quality projects, the people that are having trouble are the smaller companies. So if you have a market cap of 10 million to 50 million, and then you need to borrow anything, it is really difficult. The banks do not want to deal with the small companies, but they're fine with some of these. If you can get your market cap over 100 million and you have a good project, you can finance it.
Especially if they'll sell a silver byproduct stream to say Franco Nevada or Wheaton Precious Metals or Royal Gold. Because some of these companies, I think New Gold, when they got in trouble, they had to sell some silver byproduct streams. So Royal Gold and some of the other companies take advantage of that. And now it's part of the normal capital structure to build a mine that normally it's not just at an equity. They're going to sell a stream, some type of streaming financing
Yeah,
in order to reduce debt or equity capital.
yeah. I don't like the streams, but they're becoming very common, and so.
Well,
uh,
but
that-
for 10 years, Don, that was the majority of the capital that was available because the banks wouldn't lend. I mean, maybe now at a higher price, you're going to see more pension funds and more banks are going to lend some of the capital there into mining, but like they were for a number of different reasons, whether it was Basel III or what ESG policy, because they were anti-fossil fuel and anti-mining. A lot of these banks were just they didn't want to fund any commodities projects whatsoever, unless they were like lithium mines or something,
right.
something that was connected to ESG.
Right. So, yeah. So, as investors, what we want to find is projects like Vizsla Silver and Go Gold, where they have a bunch of cash on their balance sheet already. And so, when you have a bunch of cash on your balance sheet already, it's a lot easier to go to a bank and borrow it the rest, whatever you need, and then a little bit of equity to go with it. That's what you try to find. Um, and then any other situation, it can become dicey for shareholders. But you look for the better situation. Now, I really like what Discovery Silver did by acquiring that Porcupine mine. That allowed them to put a bunch of cash on their balance sheet. So now, when they get their permit for Cordero, they will have no problem borrowing money for it. They probably will do some dilution, but borrowing money will be easy because of all that free cash flow they have. So, and then Integra was another one that I thought was very smart. They acquired the Florida Canyon mine, and that's generating free cash for them. So when they go to build their mine, they have two mines to build. They'll be able to borrow it. So I like that. I love that approach. New Gold did the same thing. They acquired Maritime. Now Maritime is going to generate some cash for them, and then when they go to build their mine, it'll be easy for them to borrow. So I hope that's a trend in the future. These development companies try to acquire a producing asset.
And you had Dundee Mining they had a growth problem. They had an old gold mine, and they just bought the last 9 or 10 months, they bought a producing or a development asset for a silver mine in Eastern Europe. So there was some smart dip buying for some of the silver assets over the last 10 to 12 months before the move up in the silver price.
Yeah, it seems like every silver project that's accretive, that's vulnerable, gets taken out. Yeah, the Varus project, the Adriatic Silver, it was a beautiful project, and DPM Metals went in there and took it out at a really good price. Unbelievable how these quality projects get acquired for great prices, if you will. So,
So I
and
want
I
to ask
think
you about geopolitical risk now, because we've seen what happened in Barrick Gold and Mali, and a lot of people talking to industry insiders, that cost the CEO Mark Bristow his job. That the mine confiscation in Mali. We've seen the stuff in Indonesia come out. I think they're talking about some type of export ban on gold. They had a mine closure there with the largest copper and gold mine, Grosberg. Are there countries you think are headed in the wrong direction for mines, and that for geopolitical risk, you do not want to invest in, say, like open pit mining in Mexico, getting a new permit? Which countries do you think have the worst risk reward right now? Would you say Africa?
yeah, but yeah, I would say Africa is probably the most risky. I've never really liked South Africa. I've had bad luck there. I don't like Central Africa. I don't really like East Africa. Um, and so West Africa has been the one place that I'm comfortable with. But now we have juntas in both Mali and Burkina Faso. And both of those juntas the generals that took them over seem to like the power that they've acquired. It's like they're going to stay in, they're going to bye-bye democracy in both of those countries. That these two military leaders look like they want to stick around, which is really bad news for the mining industry. But I like Ghana. I like Cody. I like Senegal. Those three countries, I think, I'm okay with those countries in West Africa, and that's kind of where there's a lot of mines in there. Galiano, Perseus, Endeavor Mining. In those three countries, there's a lot of opportunity. Asante. Now, Mali, you don't want to own a company that has only one project in Mali, but if you're diversified, it only has one. Like Resolute Mine has one there. B2 has one. I'm, I'm okay
Well,
with.
but yeah, B2 has a giant mine coming online in Canada, right? So I mean, like that's going to be the majority of their growth driver, is the mine that's almost done in Canada.
Yeah, they're a million ounce producer now, and that project in Canada is ramping up right now as we speak, and that's going to add a lot of free cash flow to them, which would create some diversification. Plus, they're building another mine right after that one, and so B2 is a growth story, so they're a bit diversified. So I'm okay with owning that. But if it was a single mine company, I wouldn't want to be in Burkina Faso. Like right now, West African Resources is only in Burkina Faso, which that makes me a little nervous there. Now
Oh
these
yeah,
guys,
I wouldn't buy a single asset producer in Africa right now. I think the actually the two best African miners that understand like the geology there, finding good mines and diversification. They don't do gold and silver mining per se. They have a large platinum mine coming online. The other one is Ivanhoe Mines, so they have a lot of copper, and they have an enormous platinum group metal mine. Platreef, which is about to cash flow in the next couple months. That's phase one. That's going to be when it gets up to phase two, the world's lowest cost, I think, platinum group metal, platinum and palladium mine. And then the other one that's diversified, Don, that's a mid-tier miner. I know you like the juniors, but Endeavor. So like a company, when one of these good African gold or silver miners gets deeply discounted, Endeavor, which is a mid-tier miner, they just go in and buy up the asset because they're kind of the most diversified African miner. They buy the best projects. They just wait. They're kind of patient and they buy their time until one of these great assets in Africa becomes deeply discounted, and they have like a diversified African gold and silver portfolio.
Um, yeah, I actually consider Endeavor Mining to be a major, but I define them differently than most people. I consider any company has a market cap of $4 billion to be a major. That's how I define it. Um,
Yeah,
and
Wall Street would call that a rounding error. A lot like the average generalist money manager, like a $4 billion market cap company is a small cap.
yeah, Endeavor Mining's 10 billion. But I do mid tiers up to 4 billion. And then above four, I do majors. So Endeavor Mining is 10 billion. So I definitely consider that a major. But yeah, they're fantastic. Perseus and Endeavor are kind of the leaders in West Africa. They've done a really good job building mines and keeping a lot of free cash flow. So I don't want to ignore West Africa because most of them are surface mines with low cost and they can generate a lot. Also, I don't think we're going to see nationalization in Burkina Faso or Mali because there's just too many mines and they just don't have the talent to do it. Plus, they basically chopping off their nose to spite their face because all the foreign money would disappear, and they'd have to do it all themselves. And I don't think they want that. They want the foreign money in there. They want the expertise. So the one thing that they can do is they can slowly squeeze the industry by requiring the government owns a certain portion of the mines, and then they get the royalties, and then they make them pay an extra tax for the locals, and basically they just squeeze the profit. They can definitely do that. I think that's the risk, but I'm not worried about nationalization. The last country to do nationalization was Venezuela, and that's been a total mess for their mining industry.
They have good geology there too. Yeah, they have a lot of potential for geology, but until that whole government, there's a huge change there for foreign direct investment. I just don't see any sizable investment for oil and natural gas or mining or anything going into Venezuela. They have a lot of potential though if things were to change.
So we have, the best place I like is the US, Canada, and Australia. And Australia has a lot of mid-tier producers, whereas the Canada and the US, they become very rare because all the individual mid-tier producers, they tend to get acquired because people love the location. And so it's hard for them to stay. Like you mentioned, Artemis Gold as being a target. And once Osisko builds theirs, once Skeena builds theirs, they'll be targets. West Red Lake, but they tend to disappear, if you will. Whereas there's a lot of mid tiers in Australia, probably 15. And then you go to Central America and you go to South America, and so the only place in Central America that most of Central America is okay for me. I don't really worry about it, but in South America, Ecuador. That I'm not a big fan of Ecuador, but the rest of the
Well, but they have the arguably the top gold mine for cost and profit margin in the world for Lundin Gold. But I would argue that
yeah,
Lundin Gold should have bought another asset, say in Canada or somewhere safer for diversification. I'm kind of shocked they haven't. But they do
well,
have the top. What Fruta del Norte is the top in terms of profit margin and cost
yeah,
is one of the tops in the world.
right. But the political situation in Ecuador is unstable, and the reason why, what I mean by that is DPM Metals, they had a license, they had a permitted environmental license, and it was taken away from them just in the last month. And you don't see that happen very often. Same thing happened in Panama, where they took away the environmental license for a
Cobre
big
Panama,
copper
yeah.
mine, and then also another gold mine in Panama. They just took them away. You don't see that very often in in most of these countries.
Well, Latin America, unfortunately, a lot of that stuff, because there's a lot of environmental protests. I mean, Peru, that's been going on for a long time. The recent Mexico
Right.
elections, they were talking about at least like delaying the open pit mining permits. I think
I
Scheinbaum and some of the other
yeah,
people wanted them banned. So it's
I
kind of confusing there what the situation is for open pit mining in Mexico.
I well, Silver Tiger just got an open pit mine permit 2 weeks ago. So I think the open pit permits are coming. The next one I think is going to be Go Gold in Discovery. I think they'll get theirs very soon, and then everybody will realize that Mexico is open for business for open pit mines. I do not think that they're going to deny any of these open pit permits in Mexico.
Well,
I'm
that's good.
I'm
That's good
I'm
because it had everyone spooked last year.
yeah. I mean I've been bullish since September when I went to Beaver Creek, and all the companies were just uber optimistic that they were going to get their permits, and sure enough, Silver Tiger got theirs. Now, as far as kind of risk in South America goes, I don't really have a problem in Argentina and Chile and Peru. The key is the local, as long as there's no local resistance. You mentioned potential local resistance for Corani. I haven't heard that, but the
No,
local
no, well,
resistance,
not for Karani. The major issue for Karani is that even though there's a lot of silver, it's mostly a base metal mine. So you'd have to get like a Tech or a Lundin Mining, a base metal miner, some type of diversified base metal miner there, and it's not a primary silver mine. So they do have a lot of silver, but it's
it,
all byproduct. And
I,
the issue with the Bear Creek mining, Don, do you remember like Santa Ana? They actually had a pure silver mine that was like between 5 and 10 million ounces. They had multiple stages of growth. That mine got shut down with the locals. So that was
right,
actually a good potential mine like 15 years ago, back in 2010, and that mine was blocked. That was a
yeah.
Peru mine. Yeah, that was the other asset. Like they don't even talk about that mine anymore. That mine got buried.
Right. The first 3 years of production at Corani is 16 million ounces of silver. So I'm now it also has 4.5 billion pounds of lead and zinc, which is a lot. But if you're mining 16 million ounces a year, now it's only 50 grams, not quite 2 ounces per. But I think the revenue is going to be, well north of 25%. So the way I look at it is I don't want to have a mine that's less than 25% precious metals. But this one's going to be well north of 25%. So I don't see it as a base metals mine, but I see it as a silver mine.
Well, to fund the mine construction, though, normally there's that much base metal, so you can't sell a base metal stream because no one will buy a base metal stream. So the
Right.
financing for that type of mine, it would be easier if, say, like a BHP Bulletin or Rio Tinto or a Tech or a Lundin Mining were to buy the mine like that and then sell a silver byproduct stream. Now, I know you don't like those, but like, practical here in reality, the way base metal mines get funded a lot of the times is they have to use a combination of debt, equity, and sell some type of byproduct stream.
Yeah, this particular one, it's 4.4% of production was sold to Sandstorm, but I'm okay with 4.4%. It's not
Well, yeah, Royal Gold now. So it was changed, I think. Wheaton Precious Metals actually had a stream on that like over a decade ago, and it was renegotiated down, and then Sandstorm got a royalty on that like 7 or 8 months ago. It was because one of the other Mercedes mine was out of production, and then they renegotiated with Bear Creek, and Bear Creek gave
yeah.
them a royalty on Karani. So I think it's only like a 1% royalty.
Yeah, it's 4.4% of production for the life of the mine.
Yeah, for Wheaton, I think Wheaton negotiated it down. It used to be way more than that. Yeah, Wheaton, but Wheaton will provide financing. So if a base metal miner wants to buy the project, they can potentially negotiate with Wheaton Precious Metals and Royal Gold as like a syndicated stream. So
Oh,
they
I
can
might be.
negotiate.
Oh, I misspoke. I was talking about the Mercedes mines has the 4.4%. I was wrong.
Oh yeah, that was the one in Mexico. So like that mine went offline for a while, and then the miner gave Sandstorm Gold when it was renegotiated because they weren't getting the cash flow on that. They got a royalty on Karani.
Right. So that Corani, after 3 years, it drops to 10 million ounces for 22 years. So yeah, the key is going to be that they will need the base metal offsets to lower the ASIC, if you will. But the ASIC is going to be really low for those. For instance, 16 million ounces of silver a year at $100 with a low ASIC using the lead and the zinc offsets. That's a very profitable mine as long as you can sell the lead and the zinc, which I'm confident they can do. But it requires a 3-year build. So that's kind of I don't think people like that. It's a high capex. Nobody wants to take a risk on it.
Well, that's a lot of the potential silver mines. So the silver mines, some of the largest silver mines, Don, that are top five or top 10 in terms of reserves, La Navidad in Argentina, Escobal in Guatemala, they're either on care and maintenance or the permits are being blocked. So the potential to bring on new silver supply in the next couple years,
Oh, it's
a lot
low.
of it is very, very low, I would say.
Oh yeah, yeah, absolutely. Silver prices break out. There's not going to be a uh, big movement, if you will, to increase silver production. It's not going to happen. It takes a lot of long time to build these mines, and
Well,
they're on very anyway.
especially because the majority of those mines are byproducts. So, like Corani and some of the others, even though it would be a lot of annual silver production, it's still byproducts. So you have to convince a base metal miner or a copper miner or a gold miner that they're going to invest the capital to also make money on the other metals.
Well, to increase production 10% in silver, you'd need a million ounces. I mean, a billion, excuse me, you need 100 million. 10% would be 100 million ounces of new production. So where are you going to find 100 million ounces of silver production? It's not happening.
It's hard even getting a silver deposit with 5 million or 10 million. It's very hard
Yeah.
because one thing, Don, and we've talked about this over the years, is the ore grades. I mean, they're down a lot every 7 to 10 years at a lot of the producing silver, like Mag Silver. You talked about Mag Silver. That was one of the top deposits to come online. I think the grades are already down 20 or 30% at Mag Silver. They're down substantially, even though it is one of the highest grade, lowest cost projects. The grades are still falling.
Right. So it's going to be, once silver prices take off, it's going to be really hard to increase supply, really difficult.
Yep, because they can find more silver, but like the cost might be higher or the ore grades will be lower, and there needs to be a much higher price for it. I mean, we were talking for years, Don, how we needed $35 minimum silver just to bring on any new supply. So the silver price has to stay well above $35 an ounce for miners to have any incentive whatsoever to bring on new supply.
Right. Yeah. So there's definitely a supply problem for silver, I believe, for the rest of the decade.
Well, unless things open up, say at what Bolivia or some of these other countries, because Bolivia has a lot of potential. There's what Pantera Silver, some of these other potential projects. There's a lot of them there. It's just a question of, is the political landscape going to open up to where they're not going to potentially seize a mine or issue like a huge royalty tax? So if they are opening up,
Right, but from discovery to productions averages about 10 years.
oh
So,
yeah, yeah, that's the issue here. So the average person does not understand that they think that at $50 silver, a ton of supply is going to hit the market. That what people are going to sell all their silver jewelry. The market's going to be flooded with supply.
here, this gives you an idea how difficult it is. So Boumediene, the project for Aya, um, that project is fairly advanced with a PEA, and they've drilled like over 100,000 meters, and it's still at least 5 years out. So that project, it's been in existence for 3 years, and then they still need another five. So, and that one's aggressively being advanced. And in Morocco, it's easy to get permits. As a matter of fact, I think it's permitted. So that's an 8-year project from start to finish. And again, that one has plenty of funding, a great team, and it's still taking 8 years. So it's very, very hard from discovery to production. Um, Less than 5 years is almost impossible.
I want to ask you about Tether. So this stable coin, they've been buying. I don't know if you've been paying attention with the press releases.
Yeah.
They've been buying a lot of physical gold. They've been buying shares in
Yeah.
royalty companies and gold miners. Are you
Yeah.
surprised that they're adding so much gold and gold stock exposure lately?
Yeah, absolutely. I'm surprised. I mean, I think they have $13 billion in gold and they're buying aggressively. They're buying shares, they're buying physical. And now they're creating another company called Tether Gold. It's only gold, a gold-backed token. Yeah, they're going hog wild on gold. And they're being pretty smart about it because they realize this is so. Historically, people have said, the Michael Saylors have said that a Bitcoin is the ultimate asset, right?
He calls it
Isn't
gold
it?
2.0. Yeah, he calls it gold 2.0, but the stable coins are buying tons of gold exposure.
Exactly. And now so that created the stable coin really was Bitcoin. That's where the stable coin came from. And now the stable coins are buying gold. They're going, gold's actually a better asset than Bitcoin. So
The new one today, the new press release that just came out today is Royal Gold after the Sandstorm Gold acquisition closed. They just sold for $200 million the 25% equity stake in Versamet Royalty. So Royal Gold, Sandstorm Gold had debt on the balance sheet when Royal Gold bought them. They just cleared almost all that debt with the selling the 25% equity to for over $200 million, $206 million to guess who for
yeah,
Versamet Royalty to Tether.
yeah. Tether's getting involved aggressively.
So
And
Tether just bought shares of emerging mid-tier royalty company, Versamet Royalty.
yep. They like royalty plays and they like the physical. I don't think they've bought any gold miners yet. They've been focusing, I think, mostly on the royalty plays, which they think is more conservative. Um, but
I mean,
yeah,
they were buying U.S. Treasuries and junk bonds years ago. So like it's their asset mix was gobbledygook because they were talking about stable coins, but they
this
bought older U.S. Treasuries done
here,
years ago when before the Fed
yeah,
was raising interest rates, and they lost a bunch of money on those.
here's the I really believe that stable coins are going to become more popular and they're going to start. I think we're going to start using them, if you will. I really expect that. It's going to be kind of quasi private money because the U.S. Treasury is trying to go with Circle, which Circle is Tether's competitor, and Circle has better. They're they're more transparent on their financials. Tether's always been a little, not as transparent, and so I think that Circle, and I think there's going to be more stable coins.
Well, there's the Trump one. Isn't there a separate stable coin that was with the Binance guy and Eric Trump? That's the third stable coin. I think that's in the
Yeah,
top five now. That's that
yeah,
Eric Trump.
Binance. Well, there's Binance Coin. But what I think is going to happen is once Amazon accepts a stable coin, and then Walmart, if Amazon and Walmart both accept the same stable coin, what's going to happen if inflation goes higher? You'll take money because you'll know, well, let's say inflation goes up to like 6%. So you're losing 0.5% every single month. People will go, I'm going to take some of my money, I'm going to buy that stable coin and put it in my digital wallet, my phone, and I'm going to spend that. And I'm not going to worry about losing money. And I think a lot of people are going to hold these stable coins and use it to buy stuff, buy their groceries. So instead of just holding cash. So I think people are going to hold stable coins, are going to hold gold. And then I want to mention silver for Tether. Tether hasn't thought about buying physical silver or silver mining companies. I think there's going to be more companies that are going to start looking at gold and silver as kind of a go-to asset, if you will. I wouldn't be a bit surprised if Tether starts buying some physical silver as well.
That's funny because Scott Bessent, the U.S. Treasury Secretary, I mean, he's talked about like a $3 trillion worth of demand buying U.S. Treasuries for stablecoins. Like, I think that's super optimistic, but I think that seems to be the plan. They want to stuff a bunch of U.S. Treasuries into these stablecoins.
Absolutely, they absolutely want that to happen, and they're gonna try to push that over the next couple of years. So one of the things that I've saw as a trend, I thought that eventually the banks would want to use Bitcoin as a lever to bring in new clients. And so SoFi last week, they're the very first bank. If you're a customer with SoFi, you can take money. Let's say you have money, you transfer money into SoFi and into a checking account in SoFi. You can convert that money in SoFi into Bitcoin, and SoFi will custody your Bitcoin for no charge. And so so basically, if you sign up for Coinbase, it's a pain in the butt. You have to go, it basically takes you 30 minutes to do it. Whereas if you open a bank account with SoFi, it takes 5 minutes. And so SoFi, I think they're basically an internet bank. But this, for the first time, allows people that are, kind of technically challenged, if you will, and don't want to really deal with Coinbase or any of these exchanges. It allows people to buy Bitcoin and hold it through a bank. And I think more and more banks are going to be doing this. I don't think SoFi is going to get this market all themselves. I think Ally is probably going to offer it very soon as well because Ally is kind of an internet bank. But then you're going to get the big banks. You're going to get Bank of America is going to do it. But the reason why is because it's going to bring in new clients. So it's like, oh, I'm going to go be a client of SoFi. I can go buy some Bitcoin and hold my money in Bitcoin. But they're also going to allow you to buy stable coins. And so it's the same thing. It's basically you can buy stable coins, you can
This is
buy
like token money, what Ludwig von
yes.
Mises was talking about, because there's nothing restricting the supply here, and God knows what they're going to stuff into these stable coins. I mean, if the U.S. Treasury has their way, they're going to stuff like trillions of dollars of treasuries. Looked on, if I'm a non G7 central banker, if I'm in the BRICS, and I hear all this stuff, and it's like, okay, yes, the U.S. needs to find new buyers for treasuries. I'm hearing and seeing all this stuff, the threat of new sanctions on Russia and DC. They're not reporting inflation data properly. They're not reporting the raw data, what for the jobs reports or the inflation data now. The spending, the budget deficits in DC, the how quickly the national debt is growing. I think everyone knows they're underreporting the real inflation rate. I'm just going to buy gold every single month, like what the central bank in Brazil is doing. I'm just going to increase the amount of purchases. It seems like a no-brainer to me. You add up all these bad policies in DC, the pace of the interest payments on the national debt, how quickly the national debt is growing, the size of the interest payments relative to the total budget in DC. It's a no-brainer if you're looking objectively at this from a perspective that you bought a lot of U.S. Treasuries in the past. You're a trading partner with the U.S. that you do not want to be buying a lot of U.S. Treasuries now.
Yeah, absolutely. I think this is the biggest risk for the U.S. economy. Is the bond market, and the bond market is dependent on foreign money. And so, as everything you just explained, it's basically revealing more risk of holding our bonds because we keep printing more money, and then the valuation of our bonds, possibility of not getting paid back is one risk, but also about the valuation of the bond itself could go down as interest rates go higher and inflation goes higher. And so that's definitely, I think, the number one reason why gold has trended higher and will continue to trend higher is because the fragility of the bond market. Well, I wanted to bring one point back to the fact that SoFi last month started allowing their clients to buy Bitcoin using their savings accounts or checking accounts. I think that that's not the only. They're not only are they allowing them to buy Bitcoin, but they're also allowing them to buy some other tokens too, like Solana and Ethereum. But I think what's going to happen is they're going to allow their customers to buy tokenized gold. And so it's basically liquid gold. So if you have a tokenized gold, you're basically buying gold with no storage cost. And which is one of the pains of buying gold. You either have to take physical possession of it, and a lot of people don't like to do that, or you have to pay the carrying cost, the monthly carrying cost, which each into your profitability. Whereas if SoFi allows you to buy tokenized gold, that's going to be very attractive to investors.
And even though the gold price is substantially higher than it was, what, 12, 18 months ago, you're still seeing enormous purchases of dollar cost averaging. What I think Brazil just bought a record amount of physical gold tonnage. So they're dollar cost averaging because, if they were what professional money managers, they might not have chased the price higher. But it seems that, they want to stick to a plan of we want to diversify away their normal reserve holdings of U.S. Treasury. So some of these other countries, they see what that the Poland's, the China's, some of these other countries that they've been steadily accumulating gold tonnage for years, and they're behind the curve compared to a lot of these other countries, and they need to catch up.
Yeah, it's definitely a trend that's not going to stop. Um, we're seeing it in many nations that historically have kind of ignored gold. Brazil's one. South Korea was another one. Japan hasn't started buying gold, but they probably will. Poland started buying gold, and then Russia a lot of gold. India and China, of course.
Well, Japan's in the G7, so that would get them in some hot water then, because they have contracts, guaranteed contracts for ironclad currency swap lines for U.S. dollars. So I
Yeah.
don't know if they want to start buying gold openly like that. That would piss DC off, let's just say.
Yeah, absolutely. But the trend, I think, is there, and I don't think it's going to stop. That's why I said I think the minimum is $6,000 gold over the next 3 years, and I'm probably being too conservative. Um,
Well,
I'm
I like to say, Don, no price target long term, because tell me when DC is going to stop spending. I think both political parties in DC want to keep increasing spending. One might want to increase taxes more, but they still want to spend more. And then you add in like they want a weaker dollar. The different political parties have different projects. What now Trump is what he's bailed out just in the last 6 to 8 weeks. He's bailed out Intel Corp. That was secret. There was a secret ballot for that. There was a ballot for Argentina that Congress or the taxpayer didn't get to vote on. So I mean, there's all South Korea. I think got an unlimited currency swap line as part of their trade deal agreement. So there's all these things in there that look like bailouts, and long term, it's gonna only add to the currency supply increasing, or debt monetization, or just stuff that's long term normally inflationary.
right. The trend's pretty obvious, right? We went from 5 trillion in 2000 to 38 trillion today, and we're adding about 2 trillion a year. It's the trend is pretty obvious, right? It's gotten exponential. And you mentioned the fact that the government, the Trump administration, actually they publicly said this numerous times that they want a lower dollar. So that means a lower dollar means a higher gold, higher gold price.
And they might subsidize the data centers too. I mean, like, I hope not, but it definitely sounds like that. There's definitely a large amount of people that in political power here in DC that do want see it as part of Cold War 2.0 and a technology arms race with China, that they do not want to lose the technology arms race. And so if they potentially could start subsidizing some of these data centers as well. The other thing here that the average person doesn't understand, a hedge fund manager, I had a conversation with one over the last couple weeks about this, is global M2, which is what base money supply. Global M2, so it's not just the US, Don. Global M2 hit an all-time high $95 trillion dollars. So just in the last 5 years, the global money supply, it went from about 45, 50 trillion, it went up to 95 trillion. It's gone exponential, like parabolic. So you can't just blame the Federal Reserve Bank for the debt monetization and the currency creation. It's Europe, it's China, it's all these other countries where they do not want to cut government spending. So there's all this extra currency and credit, debt monetization globally sloshing around. I think the average person doesn't understand the amount of currency that's sloshing around.
Yeah.
95 trillion. It's insanely high.
Yes, this actually started in Japan in the 90s. This is where it all started, and then everybody else just copied them. Japan is like, oh, and that's going to be their policy. Well, we're just going to join the club. So, China went hog wild on their printing, Europe and the United States, all four of those countries, areas have actually went bonkers on money printing. I think you're right. It's not going to stop. So
Well, and
it's like
anytime we have a deflation, right, a credit, so this, whether it's French government debt or private credit markets with what First Brands or Jefferies Bank, I mean, like, do you think that the people in power in DC, are they actually going to allow, dominoes of banks or hedge funds, entities? Did you see the New York Federal Reserve Bank posted a weird chart or infographic last week about hedge fund leverage going exponential? And they made it like it was an educational and tutorial, but I viewed it as a warning that these hedge funds are caught on the wrong side of the trade with too much leverage, similar to the 2019 repo crisis. And they're warning, look, we're going to have to restart QE soon. More bailouts are coming.
right. So once Japan started, printing like drunken sailors, what they showed was it from a political standpoint that it was politically feasible. In other words, you weren't going to get, bank, for instance, the corporations weren't going to complain, right? But corporations, oh yeah, just keep printing money, more liquidity. This is fantastic, right? So
Well, especially if they get access to what unbidden government contracts, subsidies, bailouts, artificially cheap interest rates, they're huge beneficiaries of the corruption that is the Cantillon effect.
right. And then a big portion of the electric, they're like, oh, more money from Washington. Fantastic. Bring it. Keep it coming, right? So the only people that complain are a few, conservatives, but they're a very small voice. But the mainstream media doesn't complain about the debt. Nobody's really complained about the debt since Newt Gingrich in the mid 90s. Maybe Rand Paul. You can almost
Well,
name the few. But my point is this: is that politically, it's tenable. You can get away with it, and so all of these
until
countries,
there's inflation in consumer prices or people start losing their jobs on Main Street. So you have a combination, say
right?
stagflation, where
We we have inflation. Who's complaining about
well,
money
look at the
printing?
last election though. I
Trump.
mean, like the Trump candidates, a lot of them didn't win. So
Yeah, right. The big beautiful bill, though. Did you hear anybody complaining that we can't do this? It's too much money. The Democrats were complaining because they weren't spending enough money.
yeah, they want more healthcare subsidies. That would most of them would go to the insurance companies.
They were complaining because there wasn't enough spending in the bill, and it was $2 trillion a year. So there isn't anybody in Washington complaining about budget deficits and inflation. We have inflation right now. Trump is talking about a $2,000 stimmy. Who's going to vote against it? It's like, well, won't that create inflation? It'll
But
be
they
interesting.
want a weaker dollar, as you said. I agree. They want a weaker dollar. They just don't want the dollar getting too devalued too quickly. So they want kind of a controlled devaluation
Right.
where it's not getting out of control.
Right, but you actually brought this up, and I think you're spot on. The point is that nobody is trying to rein in the spending. Nobody, except for a few lone voices, and so the spending is going to continue
Yeah,
everywhere.
Thomas Massey's the only one, and look at how bad Trump's going after him publicly.
Yes, there's no voices. It's the same in Europe. It's the same in Japan and in China. There's nobody. There's no voices to slow the spending. In China, Japan, over the weekend, they said that they were going to do another $100 billion stimulus. And I asked Grok, what's this is like the 16th one they've done since 1990. They just that's what they do. They just do stimulus, and every single stimulus is money printing. So they keep doing it over and
Well,
over and over.
Japan doesn't have a culture of entrepreneurship and small business growth like the U.S. The U.S. comes up with way more new small businesses and
Yeah.
entrepreneurship and
Well,
innovation compared to a lot of those other
right.
countries.
My point is that there's no reining in and spending. Every single one of those stimulus packages is money printing. And they have they're at like 130, 140% of their GDP, maybe even higher. And that's all from all these stimulus ones. And they're still doing it. They're getting ready to do another one.
Have you seen the
Um,
gold price in Japanese yen? It's even more parabolic than the U.S. dollar gold price.
yeah, yeah, because their units went down. So that doesn't surprise me. But it's the same in the US. In the US, we are emulating Japan. We're doing stimulus programs. We don't care about the debt. And this is a train wreck. And everybody, if you turn on CNBC and you turn on a business channel, you'll get the feeling that all the analysts that come on the show, they live in a different universe. It's like all they are is confident and optimistic that everything's fine. The
Well,
economy's
they were
slow.
promoting AI and the stock. They were promoting AI and buy the dip in the stock market, and I think they even
Yeah,
had on some of these like infrastructure builders for the data centers guys, and they were talking about how there's not been any defaults
right.
on the infrastructure
Let-
for the data centers, and
let-
now the credit default swaps for that company who was
let
just
me-
on last week on business TV. The credit
yeah,
default swaps are going bonkers.
right. So I'll have to give you a list of topics that they don't mention, right? All these analysts that are also bullish, right? They don't talk about the debt problem that the budget deficit is causing issues, right? They don't
Yep.
talk about the AI is taking away jobs. They don't talk about labor; it's getting weaker.
Or that
Uh,
a weak dollar drove the stock market and all the
how,
other
we got
asset prices up.
Right. We have a housing bubble. It's getting the value, the ability to buy housing is all-time low. Retail's weak. Banking, most of the regional banks, the balance sheets are a mess. Autos, it's really difficult for autos to sell cars because of tariffs. Bankruptcies.
Auto loan too. The auto loans are too. So the auto loan, the cost for an auto loan is like double the cost of the car, and the
Yes.
car is up.
Yeah.
Most
You
people,
know,
even with $100,000 salary, Don, can't get qualified for a lot of the mortgage because they don't have enough assets. They have
right.
too much student loan debt and other credit card debt and stuff, so they can't even qualify for a normal mortgage on an expensive
Right.
home.
Yeah, they say that earnings are up, but if you take out the Mag 7, earnings are a nightmare. Inflation is still a problem. So the super core is like over 3%. We're having private credit right now. We're having bankruptcies in private credit, and we're going to talk about that. And the
But
cost of
I don't
living,
think they're going to allow, deflation for very long. What's because we're in a, heavily manipulated system with rules changes, goalposts moving, bailouts. I mean, it's not their purchasing power or currency, the people in power at the Federal Reserve Bank or in Congress. So there's really almost nothing to stop them from giving out bailouts. I mean, we've already seen some small bailouts with
we
Argentina and
yeah,
Intel.
we just talked about that. There's no political resistance. I'm almost done with my list. There's a little bit more. Cost of living problem. 50% of the American families are basically can't make their payments. The stock market, it's right now it's 200% of GDP. That's the Buffett indicator. That's why Buffett's all cash. PE is right now is like 23x, 24x, near all-time highs. Restaurants that have lower traffic right now, it's like, oh, we have a strong economy. Well, how come restaurants are having issues?
And the
Rents have
share
been,
price, to add to your point, there, the share price for some of these, and these are not the most expensive restaurants. So, like Chipotle Mexican Grill, Cava, some of these share prices are down 30, 40, 50%
yes,
in the
yes,
last like 8 months.
yes, that's a strong economy. Give me a break. Rents have been dropping dramatically. Why are they dropping? Because people can't afford them. De-dollarization is not a good trend, and it's happening. The BRICS are slowly moving away from the U.S. from trade. That's negative. U.S. Treasury bond market is definitely not healthy, if you will. And then the Fed. What exactly is the Fed going to do if we go into a recession? Are they going to be able to fight inflation and a slowing economy at the same time? I don't think so.
And the reserves at the banks are down enormously too. We're down to very low reserve levels in the banking
Right,
system for fractional reserve banking. So that's another red flag. I
right.
saw a PhD economist that's really high up in the Trump administration.
So
He was
how
almost
can
named
you,
the head of the Bureau of Labor Statistics. He was warning
right?
they're going to have to do QE because the
How,
reserve levels at the banking system are dangerously low.
right. So how can you have all these data points that are basically red flags and go onto these shows and act as if everything's fine? Everything's
Well,
absolutely
I'll
fine.
just tell you, Don, after everything you named, it looks like for regular people, small businesses on Main Street, and a lot of businesses, there's stagflation, there's pockets of deflation with the credits and the defaults, but there's really nothing to stop the people in power from changing the rules, moving the goalposts, and giving out some type of subsidy or bailout or changing the accounting rule. So if I'm in the BRICS, if I'm in the G7, and
Yeah.
I'm running a trade surplus, I have foreign exchange reserves, I'll tell you, I'm not buying US Treasuries. If I see
Well,
all the stuff that you just
let's
mentioned, I'm not
yeah.
buying US Treasuries.
Well, let's get to the crux of the whole thing. And that's the fact that the economy is is basically juggling in the air, if you will, a lot of problems. And how long can it juggle them all and basically prevent a recession? And can we go another 12 months, if you will, and not have a recession? I don't think so. We might not even be able to go much more than a few more weeks.
Well,
We're
if they're
getting
not going to
closer and
report,
closer
if
to
they're
the
not going to,
end.
Don, if they're not going to report the jobs report data, the raw data, if they're going to stop reporting that and stop reporting the consumer price index, the inflation data, the official government inflation data, I mean, like that's a red flag right there too.
Well, the one thing they have to report because it's news is when a corporation lays people off. So in October, there was 150,000 layoffs, and we're going to get the number in November and December and January. They can't avoid those numbers. And as those numbers will lead to, if you will, more layoffs because that's how corporations work. They try to get ahead of the game, if you will. If they know that it's coming, they want to do it as quick as they can. And so we'll see. And the jobs usually the unemployment is usually the last shoe to drop when you have a recession. They call it a lagging indicator. Well, it's a lagging indicator because it's the last thing to fall. And so I don't think we're very far away. I mean, when you add up, because I like to add up, the positives and the negatives. and then make a forecast. And when I look at the economy right now, I just see a train that's getting ready to fall off the tracks.
Yeah, I see weaker dollar. I see more debt monetization. I mean, I don't think they're going to be able to stuff $3 trillion into Tether or stablecoin very quickly anytime soon. I think that's extremely optimistic. They're going to have to stuff it somewhere. I see huge problems in the banking system. I do not see them allowing, Lehman Brothers and, Contagion, where multiple large banks or multiple large hedge funds start to fail like dominoes. And I've said this for years. I was covering the 2019 repo crisis, probably more than anyone back then when my YouTube channel was getting more views. But the crisis was way, way larger than they reported. I think that's the case right now. We're having similar repo problems. The New York Fed putting out with that weird infographic last week, I think that was a warning. So I think that was a warning. There was also one on Friday too. There was an emergency Fed meeting as reported by the Financial Times. You don't have the New York Fed sending out weird posts on their X social media account about hedge fund leverage going parabolic, and then an emergency Fed meeting on a Friday night. You don't that's allowed to be reported by the Financial Times. You don't have stuff like that without a lot of huge problems going on behind the scenes.
Yeah, absolutely. And these two private equity bankruptcies, I mean that's how 2008 happened. In 2007, you had a couple bankruptcies, early bankruptcies leading up to Bear Stearns. And that's kind of what we're having here. We're having
You,
these
you,
early bankruptcies.
oh yeah, are you talking about the hedge funds from that UBS just shut down
No,
that
it
had
was
exposure
before
to First
that.
Brands?
No, it was before that. It was First Brands and Tricolor, those two bankruptcies. The
Okay,
hedge
so
funds came
there's
after.
a ton of knock-on effects now. So there's like hedge funds that had exposure to that are being shut down too. But I mean, there's trillions of dollars of this garbage from the private credit, and we're talking like insurance companies, we're talking pension funds, we're talking um some of the conventional money managers that would use like modern portfolio theory, that with stocks and bonds that bought the stuff as they thought it was relatively safe high yield. It sounds exactly like mortgage-backed securities. It was rubber stamped by the ratings agencies as fairly safe, and we're starting to see that it's not.
Yeah, the UBS funds that closed were considered high rated, highly rated. They weren't. It wasn't junk bonds, right?
They
This
were
is
it sounds like the
high
ratings
quality.
agencies rubber stamped them,
Exactly, exactly.
just like mortgage-backed securities. So we're
Yeah.
back to our listeners then kind of redux, similar to what the Big Short or Margin Call, those movies, if they want to go watch those, or the 2019 repo crisis. We're starting to see a lot of similarities with the stuff private credit that's attached to it. And these things are very illiquid, Don. So these
Right.
for people who want to sell these private credit instruments, very, very liquid.
The
There's a
three,
lot. Hmm?
yeah, yeah. The three for me, the three guys that we should be paying attention to are the guys that have been around since the '60s that have seen it all. So the first guy is Buffett. And when Buffett goes to cash, $350 billion, when he goes all the cash, something bad's coming. You just know it.
Well, I wouldn't
And
go to cash. I mean, no, because they're going to want to devalue the dollar more. So I wouldn't be holding cash for very long.
Right.
I
My
disagree
yeah,
with
my
both.
point right. My point is that he went to cash because he knows something bad's coming. He sold stocks. He sold stocks and went to short-term treasuries. My point is that Buffett is he's basically telling the world something bad's coming. Okay, so you got that. The next one is Jeremy Grantham, who's basically nailed every bubble that's ever happened in his lifetime, and he says that this is the most vulnerable market he's ever seen. And he's seen some big ones, right? The third guy is Jim Rogers, who has also been around forever. And what Rogers is saying is that the business cycle has not been fixed. It has not been eliminated. And he's absolutely right. And basically, what he means is that we haven't had a recession since 2009. Get ready for it. It's coming. Those three guys, it's pretty obvious. Listen to them, and don't, listen to the talking heads on, CNBC who say everything's fine. Uh, um,
They were saying the same thing about the housing crisis and mortgage-backed securities and the banking system in 2007. So, I think the private credit problems, if there's, like I said, emergency Fed meetings on a Friday night that were allowed to be reported, and the New York Fed's posting a weird infographic chart about parabolic hedge fund leverage, there's
the
definitely a
other,
lot going on behind the
yeah,
scenes we do not know about.
yeah, the other omen that was saying sell, sell, sell was today. the S&P, the bottom of the S&P was 666 in 2008. Today, the S&P 500 closed at 6668. It was like a signal. It was like trying to tell you, get out, run. I thought it was a total omen. I actually
Well,
tweeted
I
it
mean,
out.
the stock market has been totally divorced from reality for a while now, and it just seems to be getting worse every couple of years because, unfortunately, with the people in power at the Federal Reserve Bank, the U.S. Treasury, I even heard on Fox Business today, they mentioned the wealth effect on one of the shows like almost half a dozen times. So I was shocked to hear them keep promoting how well the stock market has been doing overall the last like couple of years and the wealth effect and something like that because that's
Oh
just
my God.
creating wealth.
They, they, you mentioned that they keep saying positive things. They like to have on Jeremy Siegel on Fridays on the closing bell. And that guy is just so bullish. Everything's fine. All the numbers. And then they had a guy on from BlackRock, the head investor guy. He said this is the best investing environment that he's ever seen in his lifetime.
Huh?
Yeah, yeah. He was the head of BlackRock, and that's what he said. This is the best investing environment I've ever seen. Unbelievable. And but the optimism that they've every day. I mean, it's unbelievable.
Well, wasn't there optimism towards the top in what 1999? There was too much optimism then. People didn't see the crash coming because they were like, "Oh, people are chicken littles." They've been saying that the tech stocks were going to crash for a while. There was similar huge optimism, I think, in 2007. They're like, "Oh, the housing prices have never fallen. You're overestimating the problems with the banks and the mortgage-backed securities." So there was a very similar over-optimism because the asset prices, the stock market, and the government economic data
Yeah,
was not telling the full story.
just just tomorrow, watch the first 5 minutes of the halftime show. They'll usually have four. They call them committee members, four analysts, and see if any of them say anything negative. Even though the stock was down one, the stock market was down 1% today. And then watch the closing bell for the first 5 minutes and see if they say anything negative. I
Well,
haven't
well,
heard,
not a single one Don
I
has
haven't heard
really brought.
anything.
Not a single one of them has brought up that a weak dollar has played a factor into the higher stock market prices, gold, and a lot of the other assets going up. So there's been
Well,
a couple of people that have mentioned that, but the majority of them on business TV have avoided
the,
that.
their customers, the reason why they never negative is their customers are buyers of stocks and bonds. That's their customers. They're buyers. They're not sellers. So they don't want to encourage their clients, if you will, to sell. That's bad, right? So they have to talk their book, and they do, and it's unbelievable because I think it needs to balance. We need a little bit of a balanced approach here. They should have, three analysts and then one private equity guy. Some guy that has his own fund. I think that person would be a little bit more
Yeah,
balanced.
let's not have a private equity guy because I saw a couple of them saying that there's no defaults. Like there was a guy from Blue Owl, which was a data center infrastructure company, who was talking about that the amount of underwriting, how strict their standards are, and there's been like almost no defaults on data center debt. Like that was on last week or the week before.
Well, right, that's true. A lot of the private equity are bulls as well, but there are a lot of private equity people. They make their money, on the 2 and 20. I'm talking about private hedge funds when I say private equity. They make money on 2 and 20, so they got to be careful on what they invest in. And so those are a little bit, I don't know. Uh, some of those guys I think are,
They're disingenuous when they go on business TV. They're probably not going to give out their best stock picks, or they're going on there talking their book, like you said, with an agenda. Especially if they're a bond fund manager. I mean, they're going to talk up that U.S. Treasuries are like the ultimate dip buying, the bear market's about to end, and there's going to be a huge rally. That
well,
bond.
yeah, it's very, very rare when they announce their names and they tell which company they work for. It's pretty rare for them not to have somebody from a big company, if you will. So the bigger the company, I think the more they're bought into kind of the narrative of the day.
Well, Don, as we wrap up here, please tell my listeners more about the largest database for gold and silver stocks in your book.
Yeah, thanks. So my database is goldstockdata.com. So if you own any gold and silver mining stocks, you want to check it out. I mean, I actually analyze not all 800, but most of them. Some of the micro caps I let somebody else do, but anything has a market cap over 20 million, it's a developer or producer. I tend to analyze it and rate it myself. So they've all been rated. So it gives you lots of leads. If you don't own any gold and silver mining stocks, then read my book and then see if it looks interesting. And my book's on Amazon. Just look for Don Durrett and you'll see the gold book. It has a black cover. But thanks for having me on, Jason.